the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So it's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. Perspective, the stock was $4.50 when we announced the treasury strategy.
Yeah.
And today the stock's $43. So it's gone up by 10 times. Ethereum has risen by 50%. And that Ethereum is facing a moment that what we call a super cycle.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Tom Lee breaks down the world's largest Ethereum treasury, Bitcoin's volatility, and long-term investment strategies. Let's dive in together.
You know, we've written about Bitcoin for a long time, almost 9 years now.
Yeah.
And I've respected the halving cycle because it makes sense. There's a block reward that's shrinking. So therefore, that has some effect on mining and the proof of work, and therefore it should have an effect on price and supply. But that's really a liquidity framework. And liquidity meaning, buying versus selling. There's a much bigger factor driving liquidity in Bitcoin today.
What is it?
Well, there are two drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, 5%. Yes. But, and this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin.
They don't own it?
Yes.
Oh.
So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
Surprising.
Yeah, you can imagine that will cause an asymptotic rise in Bitcoin's price. That's the first driver. The second driver is that governments are viewing Bitcoin as a reserve asset. The United States is going to... they're not the only country. El Salvador was the first, really. Yeah. And when governments begin to buy Bitcoin, that's another buyer of Bitcoin that I think is bigger than the halving cycle. So I think that because of institutions and governments, there probably isn't.
Bitcoin is closing out September 2025 with an impressive 8% gain, setting the stage for its best September in over a decade. Traditionally, September has been a difficult month for Bitcoin, often nicknamed Rectember, due to its historical trend of averaging around 8% in losses. This year, however, the narrative has completely flipped. At $116,312, Bitcoin has not only shaken off seasonal weakness, but is also delivering its second-best September performance ever, only behind the remarkable 19.8% surge seen back in 2012. This bullish momentum has caught the attention of investors worldwide, especially as Bitcoin continues to outperform other assets that are also hitting new highs, like gold and the S&P 500. What makes this run even more unusual is the sharp decline in volatility. Historically, Bitcoin's bull markets have been defined by wild price swings and deep drawdowns, sometimes over 80%. Yet in 2025, drawdowns have been limited to around 30%, and volatility has fallen to levels not seen in more than 10 years. Such stability in the middle of a bull market is rare and has many speculating whether Bitcoin's growth cycle is maturing. While this year may not yet rival the explosive surges of earlier cycles, the resilience and steady gains are creating a unique chapter in Bitcoin's history. September's strong close suggests this market has plenty more to reveal.
Well, anyone can create an Ethereum treasury because we've seen it in Bitcoin. There's 53 Bitcoin treasury companies.
53?
53.
Oh, that's a lot.
there are, but there's really only a handful that have come championed by institutional investors. So of the 53, I'd say only 3 of them actually have institutions buying the stock. MicroStrategy, MetaPlanet, and Semler Scientific.
Yeah, maybe that's why I only heard those 3 stocks.
Correct. That's right. So the other ones are not going to be as successful growing the crypto held per share.
Oh.
Because that's the most important distinguishing factor of a crypto treasury is to grow the holdings per share. So when we look at the Ethereum treasury space, BitMine has already separated itself because it's far larger than anybody else by almost 3 times.
Yeah, it is.
And the stock is one of the most liquid stocks in the world. So the way to measure that is trading volume per day. BitMine trades at about $2.6 billion of stock every day. It is the 20th most traded stock in the United States. And when a stock is liquid, it attracts institutions because institutions only buy stocks that are liquid. They want to be able to get in and out of a stock. And that's why BitMine has attracted so many institutional investors. Also, in terms of size, BitMine's market cap is around 10 billion currently, which makes it one of the largest stocks in America today. So institutional investors have to buy large companies because that's going to be part of their benchmark. That's what they call the power law.
Wow.
That in any competitive system, the larger players start to have a disproportionate benefit. And that's why MicroStrategy's valuation is growing because it's the largest. So it's not the smallest company that gets the highest valuation. It's the largest that gets the highest valuation.
And that's the same with BitMine as well.
Correct, because the next largest crypto treasuries is, again, 1/3 the size. And every week, the distance is growing. I think there is always cyclical risk, even with the stock market, because the stock market has bear markets. But my advice to anyone who invests, and this is from Peter Lynch, there's more money lost worrying about a top in the cycle than in buying good ideas.
Oh.
Okay? Meaning, if you're worried about a cycle top, you're missing out on all the upside. So it's better to actually own it for the long term. And I'll give you an example. In Bitcoin's case, as you know, since 2010 or 2009, so now we have 16 years, you've never lost money owning Bitcoin if you held it for 36 months. So even if you have a downturn, as long as you own Bitcoin for 3 years, you'll never lose money. So maybe that's more important than worrying about a downturn.
Bitcoin has surged above $117,000, reaching its highest level in 4 weeks as traders prepare for the Federal Reserve's latest policy decision. With markets pricing in a 100% chance of an interest rate cut, all eyes are now on Jerome Powell's speech following the FOMC meeting. Investors are bracing for potential volatility, as the Fed's decision could determine whether Bitcoin pushes past its current resistance or retreats back into familiar ranges. The key level to watch is $118,000. Analysts argue that breaking and holding above this resistance could open the door to fresh all-time highs, with targets stretching towards $120,000 and even $124,500. However, failure to maintain momentum may see Bitcoin dip back toward the $114,500 to $116,800 zone, or even retest the psychological $112,000 level. Despite the uncertainty, optimism remains high. With inflation concerns and labor market signals pushing the Fed towards cuts, Bitcoin is positioning itself as one of the biggest beneficiaries of easier monetary policy. September's energy is setting the stage for what could be a historic breakout. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news all for free. That's all for today's video. Until next time.